Welcome to the Daily Market Recap. Today is Wednesday, August 5, 2026. What a wild tug of war we witnessed on Wall Street today. While the Dow Jones Industrial Average chugged right past the finish line to snag yet another brand new all-time record high, the tech-heavy NASDAQ and S&P 500 decided to hit the brakes. The core catalyst, a classic sector rotation. Investors trimmed profits from mega-cap tech giants that have been flying high and reallocated cash into industrial, consumer, and value names, following a wave of solid corporate earnings reports. So while tech gave up some ground, the broader economic engine is still humming along nicely. Taking a look under the hood, sector performance was as split as a banana split. Energy and industrials held down the fort with nice green finishes, powered by strong corporate balance sheets and steady crude oil prices. Consumer discretionary got a massive booster shot thanks to earnings blowouts in travel and leisure. On the flip side, technology and semiconductors were the clear party poopers today, dragged lower by heavy profit-taking in chip makers and software heavyweights after recent multi-week rallies.
And where does that leave market emotion today? The Fear and Greed Index flashed a solid reading of 60, placing us comfortably in greed territory. Bulls are definitely still holding the steering wheel, though they're tapping the brakes just enough to keep the engine from overheating.
Big tech names took a noticeable breather today, with heavy hitters like Alphabet sliding 4% and Microsoft dipping after recent stellar runs. Chipmaker AMD also took a punch, tumbling 7% as traders reshuffled their AI exposure. But don't start playing sad violin music for the overall market just yet. The Dow Jones surged over 260 points to slam down a fresh record high. Robust earnings from consumer giants like Disney, which got a huge bump from a $1 billion box office hit, and Booking Holdings proved that outside of pure tech, the American consumer is still spending big. The labor market is officially chilling out. Today's ADP private payroll report showed that U.S. private employers added just 44,000 jobs last month, well below Wall Street's expected 68,000. Now, while a hiring slowdown might sound spooky at first glance, traders actually took it in stride. A cooling labor market takes some serious heat off inflation and keeps the door wide open for the Federal Reserve to consider interest rate policy pivots later this year. All eyes are now locked onto Friday's official government non-farm payroll report. Energy markets are holding the line. Crude oil prices remain calm and stable today, lingering right around $79 a barrel for Brent crude. Energy traders are closely watching diplomatic developments in the Middle East and keeping an eye on global shipping routes through the Strait of Hormuz. For now, the lack of immediate fresh escalation has kept panic at bay, giving broader stock markets one less headache to worry about as quarterly corporate earnings season rolls along. All right, team, let me run you through today's absolute rock stars and the stocks that took a brutal beating, starting on the bright side with our top gainers: Material Sciences, Select Water Solutions, Shopify, and Benefit Focus. MTRN and WTTR led the pack with explosive upside moves after pounding out remarkable quarterly earnings that blew analyst estimates out of the water. E-commerce giant Shop continued its monster run as merchant volume numbers soared, while BSP enjoyed a massive buying spree on heavy institutional volume. Bulls were out in full force on these four today. Now over to the dark side. Today's top losers: SolarEdge, Teradata, Insulet, and Extreme Networks. SEDG got burned as elevated borrowing costs and sluggish residential solar demand continue to weigh on margins. TDC cratered following a disappointing cloud guidance update, while Pod faced heavy selling pressure as traders locked in profits following sector-wide medical device re-ratings. Finally, XStar stumbled into the red after soft enterprise networking orders. Rough day at the office for this crew. Let's pull up the charts and examine the key technical levels for SPY, the S&P 500 ETF. SPI took a tiny half step backward today, closing right around the 770 level after tapping all-time high territory earlier in the week. On the downside, critical immediate support sits at 765, with secondary major structural support down at 760. On the upside, bulls need to break and hold above the 775 resistance zone to launch the next leg higher towards 780. As long as 765 holds, the primary uptrend remains fully intact. Next up is QQQ, representing the tech-heavy NASDAQ 100. QQQ faced some healthy digestion today, sliding down toward the 716 region. Key support for QQQ now sits firmly at 710 to 712, a zone that buyers have aggressively defended in past pullbacks. If that level breaks, look for secondary support near 702. On the resistance side, bulls face a ceiling at 725, followed by the major psychological barrier at 730. Tech bulls need to reclaim 725 quickly to get momentum flowing back into growth stocks. And finally, let's look at IWM, the Russell 2000 small cap ETF. Small caps took a minor breath today, resting right around $300. For IWM, immediate support is anchored at $295, with stronger trendline support sitting at $290. On the resistance front, $305 is the big line in the sand. A breakout above $305 could trigger a massive short squeeze and send small caps flying toward $315. Watch that $295 to $305 range very closely over the next few sessions. Moving over to the digital asset arena, Bitcoin is currently consolidating around the $64,000 mark, navigating a classic range-bound environment. Immediate technical support for Bitcoin is sitting between $63,800 and $64,000, with heavy on-chain buying demand waiting near $63,000. On the upside, BTC faces key resistance at $65,300 to $65,500. A clean 4-hour candle close above $65,500 is what bulls need to spark a pushback towards $67,000. As for Ethereum, Ether is currently hovering around $3,300 to $3,400. ETH is finding solid structural support right at the $3,350 level, with deeper safety net support sitting around $3,250. On the flip side, Ethereum faces immediate overhead resistance at $3,500. Reclaiming $3,500 with strong volume will be crucial if ETH wants to mount a rally toward $3,700. Across the broader altcoin landscape, we saw a mixed risk-off consolidation pattern today. Major caps like Solana, XRP, and Dogecoin saw minor pullbacks of 1% to 2% as crypto traders mirrored the cautious tone seen in traditional tech equities. However, select utility tokens like BNB held up surprisingly well, posting modest gains. Until Bitcoin breaks out of its current consolidation box, altcoins are likely to keep trading in a sideways range. To wrap things up, overall market sentiment remains cautiously bullish as corporate profits continue to validate market valuations even as tech takes a well-deserved breather. Looking ahead to tomorrow, keep your eyes peeled for weekly initial jobless claims and energy inventory reports, which will set the stage for Friday's big non-farm payrolls report. If you enjoyed this daily market breakdown, smash that like button, hit subscribe, and drop a comment down below with your favorite stock pick of the day. Thanks for watching, and I'll catch you in the next recap.